All right, guys, let's talk about the Gartley pattern, which is the quintessential harmonic trading pattern. My favorite types of chart patterns are harmonic chart patterns that use Fibonacci numbers and look for important harmonic levels for both reversals and extension moves. And it helps you identify important levels that both professional traders are looking at and important levels that price just tends to gravitate to, right? If they line up with more confluence of Fibonacci numbers and more other technical support and resistance levels, maybe EMA and RSI levels, it tends to really act as strong reversal points. Okay, so we're going to talk about the Gartley pattern. A little bit frustrated because I just filmed this and it was a very long video and it didn't record, but we have the rules up here, guys. It's okay, we're going to do it again. Gartley pattern, these are the rules. There's some rules that you must meet. And we're going to go through them, as we draw the pattern. So we're looking at Polkadot USD here. I took off the trend lines so you can see this a little more clearly. The Gartley pattern is something of an M shape. When you see an M shape, it's a 5-point move. It's a bullish Gartley pattern, and a W shape would be a bearish Gartley pattern, maybe something like this, like a W, right? So we're going to go ahead and draw this out here. What we do is we use this tool right here, which is our XABCD pattern on TradingView. And we're going to start with our X point at the start of the move. And we measure from X to A is our first impulse move, right? So we have that clicked. Now we come down to the reversal. And you see the number moving there. That's a XA Fibonacci retracement. And look at our rule right there. For the B point, B must be between 618 and 786 of XA. So if we were up here, this would not, if price only came up here, you can see 441, it would not be a valid Gartley pattern. This would be a BAT pattern, but we will talk about that in the next chapter. But we came down price to here, right? So 664, that was our B point. And so you can see it satisfies the rule because it's between 618 and 786. We passed the 618 and we did not reach the 786. So that's a valid B point. Now our C point is up here at 760, at 77%. And that also is valid because C point must be between 382 and 886 of AB, and we did not pass 886. We were 77. And D point completion at 786 of XA. So we're going to come down here and we have a perfect 786. So that's our D point completion, and there is our bullish Gartley pattern in all her beauty. So we have another rule here. You can see a required AB equals CD move. This is an absolute requirement of the quintessential textbook proper Gartley, right? A lot of times you can look up Gartley rules on the internet and some people might call Gartley something, but from the textbooks, from Scott Carney, from William H. Gartley himself, required AB equals CD, and we do have that here. It is valid, and we can go ahead and do that the way we've been doing. We draw our AB move, copy and paste it, and we have our CD move right there, and you can see that requirement was met. AB equals CD completion. We have a D point completion at 786, and so we are meeting our two completion rules. So like the ABCD, we start to draw a potential reversal zone right here. Let's make this green. And we have our AB equals CD completion and our 786 of XA in this potential reversal zone. This is where you look for entries. Now, again, like I said, if you have a strong support level, like you do here, where if you draw this left, you see it was previous support. You guys saw earlier, I had this sort of trend line here on Polkadot from my last video where we have many bounces. These are kinds of things you can do to look for stronger levels. But just staying on topic of the Gartley pattern itself, let's talk about profit losses, about profit targets, stop losses, and how to scale in and out of positions. So, well, first of all, we're going to add one more point of confluence, right? We're going to add our CV projection just as we do in the ABCD patterns. And again, we're going to do a Fibonacci inversion from CB back to C. And you see we have our 127 projection right there. Let me just move that so you can see 1.27. So our 1.27 level, if we go ahead and double click this, we can throw on our 1414 and see that it's right there in our potential reversal zone. So we're going to go with that one. BC projection of 1414, 786 D point completion, and AB equals CD D point completion are 2 requirements. And now we have 3 Fibonacci confluences in our potential reversal zone. Again, we like to label this PRZ. So potential reversal zone. You can see price did in fact reverse. We printed a bullish engulfing candle. That could have been your signal to get in. Some people like to wait for more confirmation, right? Sometimes not to get involved. If you have just a giant red candle, just hammer through your PRZ. That's not when you get involved. You want to wait for the red candle that takes you to there to close for sure, because you don't want to close below it, right? Below X and make lower lows. You want to wait for that candle to close and see how price reacts. Now, when that candle does close, some people like to get in right there on D point completion and 786 completion. So it's up to you. Now, potential stop losses. It has to be below X, right? We're going to make this red. Why is that? Because we are bullish, right? This is a bullish Gartley pattern. And that means as buyers, we want to see bullish price action. And again, what is bullish price action? Higher highs and higher lows. So if X was our initial point and we were to break X or go past X, that means we're making lower lows, right? And as a buyer, you don't want to make lower lows because that's bearish price action, and so you don't want your money in a trade that's doing bearish price action. So that's when you would put your stop loss. Okay, you always put it below the lows because you don't want price to be making lower lows when you're bullish. Okay, and now standard profit taken would be at an AD 382 Fibonacci retracement. You can see this one worked out because we hit those targets, and so we hit target ones. You can call these target ones, and that was a nice 9 or 10% move there of profits, right? And so there's many options to take profits. Some people like to call this target ones, and they will take half of their profit potentially, maybe move your stop loss up here to break even, because this is where you entered. So now if price comes down and stops you out, you don't lose anything, right? Because that's break even, and you got out with half your profits at 10%. It's now a winning trade forever. You know, it can no longer be a losing trade. And you know, people will hold their second half of the bag until maybe a point, until we reach those highs or break those highs or whatever they want, right? Another option, some people just take full profits at 382, and you guys can experiment with whatever fits your trading strategy and risk management rules the best, okay? But that is the bullish Gartley pattern. Just to recap, it's a 5-point move, 5-point structure move. Your B point must hit the 618, but it cannot hit the 786. So we met that requirement. Your C point must be at least a 382 retracement of AB, but it cannot be an 886. We meet that requirement. And your D point completion is at a 786 retracement of XA. And just one way, guys, to validate that for you guys, if you go ahead and grab a Fibonacci retracement from X to A, and we go ahead and double click here and throw a 786, you'll see that that is your D point completion right there, and it matches with the 786. So this tool does all that for you, but you can always double check there. We have our AB equals CD completion point. We have 3 confluences in our potential reversal zone because again we had our CB projection, 141 Fibonacci extension. Again, the most important Fibonacci extension numbers are the 1618, the 1414, and the 127. Okay, the 127 we saw in the alternate ABCD patterns. But that is a bullish Gartley pattern, guys. So thanks for watching. Let's move on.